Did Trump just turn his back on America's auto giants with his new UK deal? Ford, General Motors, and Stellantis are extremely outraged. These aren't just car companies, they're economic engines, fueling millions of US jobs, pushing innovation, and pouring billions into the economy. GM alone contributed over $39 billion to GDP in 2022. But now, a political move has them warning of higher costs, lost jobs, and broken trust. After years of trade wars, strikes, and rising tariffs, this latest US-UK deal feels less like strategy and more like sabotage. Is the White House helping foreign rivals at the expense of Detroit? Hit the like and subscribe button for upcoming updates, and let's dive into the details behind the chaos. General Motors, Ford, and Stellantis are not just irritated, they're outright furious about Trump's so-called deal with the UK. The crux of the issue? British automakers have secured a sweetheart arrangement. They can export up to 100,000 vehicles to the US each year at a reduced 10% tariff. That matches the UK's entire US car export volume from last year, meaning virtually all UK car exports now get this lower rate. Meanwhile, vehicles imported from North American plants, like those in Mexico and Canada, still face a 25% tariff unless they meet strict US content requirements under USMCA. The American Automotive Policy Council, which represents the Detroit Three, blasted the move. They said it will now be cheaper to import a UK vehicle with very little US content than a USMCA-compliant vehicle that's half American parts. That's not just frustrating, it's a direct blow to US auto workers, suppliers, and manufacturing ecosystems. And while Trump's administration touts this as a tailor-made solution, the industry sees it as favoritism that undercuts the very trade deal Trump previously celebrated, the USMCA. If this is what a template deal looks like, the industry's worried about what might come next. Let's look at why. The biggest fear for US automakers isn't just this UK deal, it's what happens if it becomes the model for more. If other countries, especially auto powerhouses like Germany, Japan, or South Korea, push for similar terms, the entire structure of North American auto trade gets undermined. Ford, GM, and Stellantis all depend on complex supply chains across Canada and Mexico. With 25% tariffs still hitting those routes, and a 10% door now wide open for UK cars, there's a clear competitive imbalance. The Trump administration insists these are custom deals, not one-size-fits-all. But the industry's not buying it. The automakers said in a joint statement, "We are disappointed that the administration prioritized the UK ahead of our North American partners." It's not just about loyalty, it's about logic. Canada and Mexico are America's top auto trade partners. The UK accounts for just 3% of total US trade. What's more, this isn't even a full trade deal. There's no congressional approval, no detailed framework, just a flashy tariff carve-out dressed up as a diplomatic win. Critics call it a nothing burger, and they're not wrong. Now let's see who actually came out ahead in this deal. And it's not Detroit. While Detroit's automakers are livid, not every sector is sulking. The deal also removes tariffs on UK steel and aluminium, forming a kind of mini trading union for metal components. This is a relief for British steel and a win for Rolls-Royce, which can now export aircraft engines tariff-free. But it's hard to ignore that this shift mainly helps UK industries. The problem? These tariff carve-outs for Britain come while US-based companies still struggle under the weight of broader trade restrictions. The UK only accounts for about 3% of total US trade. Yet they're receiving top-shelf treatment while Canada and Mexico, each trading tens of billions with the US auto sector, get benched. And the beef and ethanol additions. Good for a few $1 billion in opportunity, but they don't address the elephant in the showroom. The cost of building cars in North America is now higher than importing them from a country with fewer economic ties to the US. Let's zoom in now on the specific fallout for each automaker, starting with Ford. Ford didn't waste time responding to the tariffs. It's already hiked prices on models like the Bronco Sport and Mustang Mach-E, vehicles built in Mexico by up to $2,000. Why? Trump's tariffs are expected to cost the company $2.5 billion in 2025. Ford says it can cushion about $1 billion of that, but the remaining hit? That's going straight to the balance sheet, and maybe your wallet. CEO Jim Farley pulled the company's earnings guidance, citing unpredictable conditions. He's also touting Ford's advantage. 80% of its vehicles are made in the US, which could help it weather the storm better than foreign-heavy competitors. But even Ford's optimism is being tested. In April, Ford saw a 16% spike in sales thanks to its extended employee pricing program. But that's not sustainable if tariffs keep inflating costs. Investors are nervous, and Farley's message was clear. It's still too early to know how bad this could get. And if Ford's uncertain, GM's outlook isn't any brighter. Let's break down their situation. General Motors is facing a potential $5 billion blow from tariffs and has already slashed its 2025 earnings guidance from up to $12 per share to just $8.25. Goldman Sachs analysts believe GM can offset about 30% of the damage. But that still leaves billions unaccounted for. The cuts assume pricing stays strong in North America and savings continue from its self-driving unit crews. But if market dynamics shift further, GM could be forced to revise again. Meanwhile, Stellantis is in even rougher waters. With over half its US plants operating below 50% capacity and a heavy reliance on imports, it's being hit hardest by the new trade reality. CEO Carlos Tavares unexpectedly resigned in late 2024, leaving a leadership vacuum just as the company posted a staggering €2 billion in expected negative free cash flow. Stellantis' stock has dropped 54% over the past year. Restructuring, reshoring, and reviving its North American business could cost €4 billion, money it's currently struggling to secure. And it's not just about operations, it's a branding issue too. In a high-tariff America First era, foreign-heavy firms are on the defensive. So what's next for these companies? Let's map out the road ahead. Ford, GM, and Stellantis are now being pushed toward reshoring, but it won't be cheap. Stellantis is already expected to pour billions into shifting operations stateside. For GM and Ford, who already have stronger US manufacturing footprints, this could mean doubling down on domestic production and lobbying to preserve their edge under the USMCA. Stellantis, though, may face deeper cuts and structural changes. With a 6% dividend yield but rapidly declining cash flow, investors want clarity. The incoming CEO, expected in mid-2025, will need to move fast to stabilize the company and counter the bleeding in the US market. Meanwhile, all three automakers are closely watching Trump's next moves. If this UK deal becomes a prototype for Asia or Europe, the ripple effects could be massive. American automakers are demanding a seat at the table before that happens again. And Congress? It still holds the power to formalize or kill these kinds of trade arrangements. Until then, the auto industry is stuck waiting, recalculating, and bracing for what might come next. Because when trade wars start looking like trade roulette, nobody wants to be left spinning. So, we just explained how the British cars just got a shortcut into America. Detroit's automakers? Stuck in the slow lane, facing billions in costs in a future clouded by uncertainty. Ford's raising prices. GM's slashing forecasts. Stellantis is bleeding cash and losing leadership. And if this UK deal becomes the blueprint, things could spiral fast. What's at stake are the American jobs, the stability of North American trade, and who gets to call the shots in the global auto market. Is the UK deal just the beginning of a bigger shift, or a one-off mistake that needs fixing? Drop your take in the comments. Hit that like and subscribe button, and stay tuned for more updates.